It's time now for a look at today's business news, and for that I am joined on set by our business editor Stephen Carroll. Stephen, good morning.
Hi, Nadia.
You're going to be starting us off then with the electric car maker Tesla, which has announced massive job cuts.
More than 3,000 jobs, in fact, to go at the company, according to the CEO, Elon Musk. It's 9% of its workforce. Now, they're thought to be the first time that Tesla has had to make staff cuts in its 15-year history. But it's coming at a time when Elon Musk is trying to convince investors that the business is sustainable. Tesla has had difficulty meeting production targets for its first mass-market car, the Model 3. In a company-wide email published on Twitter, Mr. Musk said the cuts wouldn't affect those making the cars. He described the job losses, though, in that email, which he did post on Twitter, as being part of a structured reorganisation at the company, saying that given that Tesla has never made an annual profit in the almost 15 years since we've existed, profit is obviously not what motivates us. People watching, of course, that story very closely. Well, back here in France, the government has confirmed its plan to sell some of its investments in major companies. They include the operator of Paris's airports, ADP, the National Lottery and the energy firm Engie. A new law will remove the requirement for the state to hold a certain stake in these firms. Economy Minister Bruno Le Maire says the money could be put to better use.
It's essential to redefine the place of the state in our economy. Do we want a state that's happy to take dividends, or a strategic state that prepares for the future for France? We want a strategic state, one that instead of leaving 9 billion euros immobilized in ADP, earning dividends every year, takes that 9 billion, puts it into the Disruptive Innovation Fund and invests for the future of our children.
That's the French Economy Minister Bruno Le Maire. Well, that story already having an impact on European markets at the Open today. It's a mixed picture, generally speaking. London in the red, Paris and Frankfurt just above the flat line at the Open of trading. But the companies involved that will see the French government sell part of their stakes have seen their shares move. ADP, the company that operates Paris's airports, their shares up 5% in Paris, but shares in Engie, the energy company, are down at the start of trading today. Over in Asia, markets today mostly dipping into the red as investors move on from the Trump-Kim summit. Chinese shares taking a tumble towards the end of trading there. Shanghai and Hong Kong down by over 1%. The Kospi and Seoul finishing pretty flat. Just the Nikkei in Tokyo seeing some small gains. This as investors look forward to the meeting of the US Federal Reserve later. They're expected to announce an increase in interest rates in the United States. Well, in the US, a federal judge has approved the $85 billion takeover of Time Warner by the telecoms firm AT&T. The Justice Department had challenged the deal on the basis that it would lead to higher prices for consumers. But the court found they hadn't proved that this was true, paving the way for AT&T to buy the media company that owns channels including HBO and CNN. Alison Sargent has the details.
It's a ruling that could change the face of the U.S. media landscape. After nearly 2 years of waiting, AT&T and Time Warner will finally get to seal the deal on their $85 billion merger.
On behalf of everyone at AT&T and Time Warner, we are gratified with the court's decision to categorically reject the government's bid to block this historic merger.
Both household names in the U.S., the two companies play different roles in the entertainment supply chain. Cable company Time Warner creates content. Telecommunications giant AT&T distributes it. Content like the hit show Game of Thrones on HBO, or news broadcasts from CNN. Under the merger, the Time Warner channels will now be controlled by AT&T. It seals the company's transformation into a media powerhouse, joining the likes of Amazon and Netflix as both distributor and creator. Deals between non-competing companies are usually accepted by the U.S. government. But the Trump administration had argued the AT&T Time Warner merger would raise prices for viewers.
We're going to read the opinion and see what the next steps are. We're obviously disappointed with the judge's decision.
The court's approval of the deal opens the door to a wave of new mergers, like the dream of cable company Comcast to buy the media corporation 21st Century Fox.
Well, Toyota is investing $1 billion in the Southeast Asian ride-hailing firm Grab. Grab bought Uber's business in the region earlier this year. This round of fundraising values the startup at $10 billion. Toyota says the investment will strengthen ties between the companies, particularly through use of its connected technology in its cars. And finally from me, officials in Seattle have scrapped a plan to tax companies more after pressure from one of its biggest employers, Amazon. The levy on employees of major companies was meant to raise up to $50 million for the homeless and to build affordable housing in the city. The City Council had voted for the measure a month ago, but they changed their mind after pressure from Amazon and Starbucks, which are both headquartered there. The tax would have cost Amazon around $12 million a year compared to its annual revenues of $178 billion. The online retail giant says repealing the levy was the right move. Nadia.
Stephen, thank you very much indeed. Stephen Carroll there with our business update this hour on the programme.